Dan Kemp, you are Chief Investment Officer at Morningstar. This year has started with weeks of turmoil in the stock markets. What was the main driver behind that?
Well, I think one of the mistakes that investors make is trying to find a story to fit the facts. And we've seen a lot of that over the last few months, where people have been blaming market falls on China, on the Federal Reserve action in the US, all sorts of things. In reality, though, we should be looking at the fundamental valuations of these assets. And what we saw was that a lot of assets moved from being really quite overvalued to offering better value. And that's just normal market cyclicality. So people should focus less on what the story was and much more on where the opportunities are coming from with those valuations.
It looks like the markets are starting to recover now. What changed in the last few weeks?
Well, again, I think there were a number of factors influencing people, and it wasn't really the broader story. So people decided to start investing capital again, having refused to buy at higher levels and clearly been surprised by the sharp fall. So it's just people coming in from the sidelines. Obviously, we're getting news from China, the economic incentives they're trying to put in place, from the ECB, and also noise from the Fed. But again, that's mainly noise. Look at those valuations, and it's really those lower valuations that seem to be attracting people back into the market.
The European Central Bank increased their monthly asset purchase program recently. Does this make European stocks more appealing, or what does it mean?
At Morningstar Investment Management, we are long-term investors, and so we pay fairly little attention to shorter-term central bank moves. And frankly, if your investment thesis is based on the ECB and what they're doing, then you need to get another thesis. And so we would encourage people to not pay too much attention to the ECB and what they're doing with rates. Clearly, it's resulted in a shorter-term boost in markets, and that's great. Everyone feels better. But really, people should be looking at long-term value opportunities and basing the investment strategy on that.
And if we're looking on this long-term strategy, are there some specific sectors that you would recommend for investors?
Well, we would firstly say that you need to build your portfolio in a holistic way and make sure that all the pieces fit together rather than focus on one or two particular areas. So that's the starting point, but once you've done that, there are certainly areas that look more attractive than others that we're interested in at the moment. And again, that's been driven by falls in price that have led to better expected returns, but over the long term. So a couple of the areas we're finding attractive are emerging market equities, emerging market bonds, and recently high yield bonds as well. Again, they've been horribly beaten up by recent market action, and they're starting to look attractive. We've heard over the last couple of days about some great opportunities in Japanese cyclical consumer stocks. And again, that's an area we're looking at. So we're trying to find the contrarian opportunities, the areas of the market that are unloved, because that's where the long-term opportunities are.
You also have clients, not just in the European market, but also in Middle East and Africa. How do you see the development there in these countries and regions?
So we're seeing very rapid development, both in the Middle East. We operate in the DIFC, which is part of Dubai, and also down in South Africa. And we're seeing an incredibly rapid development in the financial services market there. People are waking up to the benefits of long-term holistic portfolio management, which is fairly new in some of these markets. We see a very well-developed and very regulated market in South Africa particularly, and there people are looking overseas especially for those broader opportunities, and that's quite a new thing for many investors there. And then in the Middle East, again, people have tended to have very concentrated portfolios and now working towards much more diversified portfolios, better constructed portfolios. And we're also seeing a development in Sharia compliant portfolios, and that's great news for people in the country that want to incorporate their religious beliefs in their investment policy.
Thank you very much.